Hey everyone! We are back with a super easy pullback strategy. Recently, we were focusing on scalping strategies with lower time frames. So, today I wanted to share a strategy that you can use on higher time frames too. The strategy that I am going to share today is a perfect fit for you if you are new to trading. Hopefully, you will be able to benefit from this strategy right after watching this tutorial. As usual, I will explain everything as simple as possible with examples, and at the end of the video, I will share a cheat sheet with you. So you don't have to take notes while watching. Before we begin, don't forget to like and subscribe. It keeps us motivated to upload more trading videos and it helps with the YouTube algorithm. Let's start with our strategy. As usual, we will use TradingView.com for our technical analysis. As promised, we will focus on higher timeframes this time. So the first thing I will do is to change the timeframe to 1 hour, but don't be shy to test out different timeframes. Also, feel free to check my old videos if you are interested in scalping strategies. Right now, I am looking at the hourly chart of Ethereum to US dollar. I use this strategy mostly with cryptocurrencies. But, you can also use it with stocks, forex, and indices, but according to my backtests, it works the best with stocks and crypto. Please be sure you backtest it yourself first before using it. According to my experience, it works better with volatile instruments. In this strategy, we will use 3 free TradingView indicators. Just like most of our strategies, we will start by adding exponential moving averages. To add indicators, you have to find the indicators icon on the top menu. We need 2 moving averages in this strategy. We will change the length of the first EMA to 200, and the color to white. And the second EMA will 50.1, and we will adjust the color to blue. You can use different colors if you feel more comfortable. Just be sure that you remember which one is which. Moving averages show us the direction of the trend. And they also act as support and resistance zones. If you are not familiar with the moving averages, you should check out my old videos before learning new strategies. It will give you a better understanding of the usage of moving averages. We will use multiple EMAs in this strategy because we want to be sure that we are on the same side of both the long-term and the short-term trends. Now, we have nearly everything we need to trade. We just need one more indicator before starting. The last indicator we will use is Fu Manchu Swing Free by Ghazal. You can add it by searching in the indicators window. We will use the Fu Manchu indicator with its regular settings and it will give us the entry signals in our strategy. Before moving on, please let me share the changes we have made so far. Feel free to pause the video and write them down. Now, we have everything we need on our chart. As you know, moving averages show us the trend. 200 period shows us the long-term trend, while the 50 period shows us the short-term one. When the short-term moving average crosses above the long-term one, it is called the golden cross. And it indicates that a bullish trend might start soon. So we will only look to go long when the 50 period EMA is above the 200 period one. On the other hand, when the short-term moving average crosses below the long-term one, it is called the death cross. The death cross is the opposite of the golden cross, and it is a bearish breakout pattern. So, when the 50 period EMA crosses below the 200 period, we will only take short entries. So, after checking the moving averages, we will look for entries. As I told you, the Fu Manchu Swing Free indicator will give us the entry signals. But if you listen carefully, you know that we won't open a position each time it says buy or sell. One of our key rules while trading is to never trade against the trend. We will use the 2 moving averages to filter entries. If the 50 period EMA is above the 200 period one, we will only take long positions, and we will ignore all sell signals. Similarly, we will take only short entries when the short-term moving average is below the long-term one. I think it is enough briefing for this strategy. Let's analyze some examples together and I will mention the rest of the rules later. I know that the chart can sometimes look like a mess, but as promised we will go step by step. Let's start here. As you see, a golden cross occurs there and it indicates that a bullish breakout might start soon. So we will look for pullbacks to jump into the trend. As you can guess, we will skip the sell signal here since we are in a bullish trend. And our first entry signal comes right after that. We will open a long position at the closing of the candle that gave us the buy signal. The first thing we should do after entering a trade is to put a stop loss. We will put our stop loss just below the swing low point. But keep in mind that, sometimes it is better to put them just below the moving averages depending on price action. We will decide on a take profit target right after setting a stop loss, and we will aim for a 2 risk-reward ratio in this strategy. That means we will try to make 2 times more than what we risk. After keeping our position open for quite some time, for a couple of days to be more specific, we will have our first win. Notice that the Vomencho indicator gave multiple entry signals while we had an open position. But we will not open multiple positions when we have an open trade, since we don't want to increase our risk. After closing our first trade with a profit, we will move on to the second one. We will avoid the sell signal as usual, and open a position at the buy signal here. Notice that the price tried to break below the long-term moving average and failed. So it is a great time to open a position. We will enter at the close of the candle that gave us the buy signal. Just like our first trade, we will put our stop loss just below the swing low, and aim for a 2 risk-reward ratio. After 2 wins in a row, we will move on to our next entry. We will open a position with our regular risk-reward settings, and we have our first losing trade. But always remember that trading is all about consistency. We will have tons of loser trades. If you backtest your strategies, they shouldn't bother you. Because with the right risk management skills, and trading psychology, you can still be profitable in the long run. We will have a buy signal right after closing our position. But I would skip this one looking at the price action. Notice that the slope of the short-term moving average is negative recently, and the price spent some time below the 200 EMA. These signs can indicate that a trend reversal might occur soon. As a trader, you should always check the price action even if it is hard to put on as a rule to our cheat sheet. Notice that we miss on a potential win by being conservative. But, it is always smarter to be careful if the price action is not on your side. Markets will continue to give us opportunities to enter. We will continue trading with the next buy signal. Notice that the price tested out the long-term moving average 2 times and failed to break it, and there are multiple bullish candles in a row. So it is the type of entry that we want. We will go long and exit at our take profit target. We can continue taking long entries until a death cross occurs. So we will open a long position again at the next buy signal. And we close our position with a loss as soon as the price touches our stop loss point. We will have one more entry before the trend changes. We will put our stop loss below the swing low as usual, and this trade is also a loser one. A death cross occurs after this trade and it can indicate a trend change. So we will stop looking for long setups. As you see, in a bullish trend we opened 6 positions and half of them were winning trades. It might look not so promising, but remember that we are trading with a risk-reward ratio of 2. So we can still be profitable even if more than half of the trades are losers. By the way, risk management and position sizing will be huge factors determining our success. As a trader, you should never risk more than 2% of your capital on a single trade. Also, if you are having problems with position sizing while trading crypto, you can watch my old videos about it. I think it is enough with the long examples. Let me show you some short setups before finishing the video. Let's check the hourly chart of Bitcoin to find some examples and try to test out our strategy in the recent bear run. We will start searching for short entries after a death cross occurs. We will skip the buy signals and focus on the sell signals since we are in a negative trend. We got our first short signal here. Notice that the price tested the 200 period moving average here and failed to break above it. Also, there are a bunch of bearish candles. So it is a type of entry we want, and we will go short when the Vomencho indicator gives us the sell signal. This time, we will put our stop loss right above the swing high point, and aim for a 2 risk-reward ratio. Our first trade takes some time to close before it hits our take profit target. We will go short again at the second sell signal. This time we will have a loser trade, so we will move on to the next one. Notice that we have a sell signal here, but the short-term moving average has a positive slope and the price stayed in a consolidation period above the 200 period EMA. It means that the price action gives mixing signals. We will be conservative again and skip this trade. We will move to the next sell signal. Notice that both of the EMA lines have negative slopes, and we have 3 bearish candles in a row. So the price action is on our side. We will open a position here with our regular risk management rules. And we managed to close it with a profit. In the recent Bitcoin sell-off we opened 3 trades in total and 2 of them were winners. Of course, those examples are not enough to trust a strategy. You should back test a strategy at least 100 times before using it. Let me share the cheat sheet with you as promised. Please feel free to take a screenshot if you want. Let me give you some quick tips to increase the win rate of this strategy. The first thing you should consider in all of the trading strategies is the price action. Remember the signals we skipped in our examples. If the price gives mixing signals, don't open a position. Second, be sure that there is a strong trend. Since it is a pullback trading strategy, it works the best when there is a strong trend. Try to avoid opening positions when the price moves in a range like this. You can check the volume and candlestick patterns to confirm your entries. Last, you can keep an eye on the RSI divergence. It is always smart to check the hidden and regular divergences before opening a position to avoid false signals. If you don't know how to use them, please check out the video above. I hope you understand the strategy. Please don't hesitate to ask your questions in the comments section. I try to answer all of them when I find the time. Also, if you find this video useful, please hit the thumbs up button below the video, and you can consider subscribing if you want to see more trading and investing content. Have an amazing day.